Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead to the 2nd of May. That's a 4-day trading week in the UK, given the bank holiday. In terms of what's going on both sides of the pond, it's still very much the question of the first quarter reporting season. An extremely busy time. Certainly in the States, generally speaking, companies have beaten expectations, although admittedly that has been set against a very low bar. And also some rather more troubled economic data is starting to come through, such as the recent US GDP miss, which has basically cemented investors' ideas that perhaps we're at the end or very near to the end of the interest rate peaking cycle. And that's very much been a positive for the previously beleaguered tech stocks. So in the year to date, the Dow Jones is currently up by 2%, the S&P 500 up by 7.7%, the Nasdaq remains a star performer, up by 16%, and the FTSE 100 is up by 5%. Turning to next week, the raft of Q1 earnings certainly continues apace. In terms of the banking sector, which has obviously seen some pressure on share prices more recently, given the wider turmoil, particularly emanating from the US, it's going to be HSBC and Lloyds banking group which finish off the reporting season. What we've seen so far is that UK banks haven't been especially affected by the recent turmoil. Indeed, in terms of capital strength and stability, they very much remain on the front foot. Shares have had a slightly mixed performance. If you look at HSBC, they're up around 18% over the last year. Some of that obviously down to the reopening of the economy in China, while Lloyds have managed to add 7% over the last year. And obviously, as a barometer of the UK, high things will be expected in terms of its own financial stability. Also, the oil majors will be reporting first quarter numbers next week. As ever, we'll be looking to their levels of debt and in particular shareholder returns. The likes of BP and Shell, of course, have been large dividend players. And obviously, at the same time, any update on the transition to greener energy, which has been in the news of late, will be watched out for, particularly by the ESG followers. In terms of share prices over the last year, BP up 38%, Shell up 13%. Also, we're going to have some numbers from Next. Despite being a very well-regarded company, sometimes the share price performance has seen the impact of a slight disappointment, despite the fact that Next tends to play down its own prospects. So the return to physical shopping could be something of a factor, although at the same time, of course, its long-standing jewelling in the crown, the online shopping unit, will also be in terms of a major focus. Full price sales, given the tough cost of living crisis, could also be a feature. And as ever with retailers, the outlook comments will also be well regarded. Next shares up about 15% over the last year. Finally, British Airways owner International Consolidated Airlines has its first quarter numbers. Shares up about 6% over the last year. Recent releases from the likes of EasyJet and Ryanair have suggested there may be something of a return of flights to pre-pandemic levels. So for International Consolidated Airlines, the kind of things to look out for will certainly be not only a return to the capacity that they're flying on the planes, but the current demand and, again, their outlook for the summer season. Thank you for watching. Have a great week.